We're going to talk about something called the Bitcoin Renaissance, Bitcoin Season 2, some people call it. We're going to dig into what that is exactly. Basically, we're making Bitcoin great again. It's no longer a pet rock. It's going to interoperate with other blockchains. It's going to be useful. It's going to be more programmable. And we're right on the cusp of doing this. It's something I'm very excited about. It's something we're investing in a lot. We're investors in some of these guys here on stage. So we have Fisher from Babylon, Manib from Stacks, Leo at Alchemia, and YQ at All Layer. Maybe very brief two-sentence introductions in terms of what you're building and how it pertains to the Bitcoin Renaissance. Let's start with you, Fisher.
Yeah, sure. Hi, everyone. This is Fisher from the Babylon project. At Babylon, we aim to build a Bitcoin-secured, decentralized world. And what we are currently offering is Bitcoin staking, which turns Bitcoin into a stakeable asset for any proof-of-stake systems in a trustless and self-custodial way. Thank you.
Hey everyone, Manib, co-founder of Stacks. Stacks is one of the OG L2s, started when Lightning starting in late 2017. And think of that as like a L2 on top of Bitcoin that is trying to make it faster, easier, cheaper, more programmable to use BTC.
Hey guys, I'm Leo. I'm building Alchemia. It's a block-based futures markets where people can tokenize gas or BTC transaction fees so that they can trade it or use it to hedge against their expenditures. So for example, during the Babylon Phase 1, some of the users were able to capture outsized profit, including myself.
So hi everyone, YQ, founder of All Layer. So at All Layer, we are building sort of rollup services. We provide rollups, basically settle on Ethereum, and right now we are trying to provide some services settle on Bitcoin. Beyond that, we are also closely working with Babylon to provide these shared securities of BTC for different sort of rollups and new AVSs.
So Manib, let's start with you. We do a lot of panels together. I know you're very reliable. Where does this notion of Bitcoin Renaissance come from? Like, where did it begin? When did this change occur? Has there really been a cultural shift in Bitcoin? And then, I know it's a lot of questions. What are the technical drivers of the shift too?
Yeah, so I think the way to think about this is like pre-Ethereum. So this is the era. So I started in 2013. So between 2013 and 2016, there was a builder culture on Bitcoin, right? Like, not a lot of people know this, but NFTs started on Bitcoin as counterparty. Stablecoins started on Bitcoin with the Omni layer. Even ICOs with colored coins like started on Bitcoin back in the day. And yes, Bitcoin community has always been a bit like more careful, risk averse, but there was dev community. And when Ethereum really started taking off in 2017, Bitcoin was going through a civil war. And we've been going through dark ages since the Civil War, where they pushed out a lot of developers. They became very sort of like closed-minded, overreacted in a way to the Civil War. And I think projects like us at Stacks, some others like Lightning, we've been trying to like open the doors again. And in the last year and a half, like starting with ordinals, I think this was the kick of the season 2. Where I think developers are coming back, capital is coming back, people are realizing that there's so much more you can do with Bitcoin. And there have been some technical breakthroughs as well. I wouldn't go too much into it, but two things I would want to mention is one is BitVM. So one of the biggest criticisms of Bitcoin L2s has been that they're more trusted than Ethereum L2s. But with things like BitVM, you get almost trustless. Like it's still in R&D, not in production yet, but at least there's a path forward where Bitcoin L2s can become a lot more trustless in terms of moving your BTC in and out. And then some of the work that we have done at Stacks is going through a major upgrade called Stacks Nakamoto. We are able to reuse 100% of Bitcoin hash power for finality. So if you do a transaction on L2, as soon as a Bitcoin block comes, now you're secured by 100% of Bitcoin hash power. So I think it's things like that where people see real value that now I can come build in Bitcoin and you know there are real benefits to it.
So Leo, we'll move to you next. You used to work in the Bitcoin mining space and then started building Alchemia. And now Alchemia pertains to Bitcoin. It's on Ethereum. You also moderated your stance on Bitcoin. You were kind of a bit like me, you know. pretty hardcore Bitcoin guy, and now you're building on Ethereum, granted Bitcoin products on Ethereum. Tell us about the transition to moderating your own stance as you went through the process of building this company.
Yeah, I was definitely much more interested in the ideology of Bitcoin more than most other projects. I started building Alchemia, and I really wanted to create this thing, but I didn't want it to be a centralized solution. So I had to use smart contracts, and this was 2021. Well, it still hasn't changed, but. There was very limited options, and the possible solution. I guess Bitcoin adjacent smart contract options didn't have enough liquidity, unlike today. Right? So that has changed. So I started exploring and realized, wow, there are a lot of very forward-thinking ideas in Ethereum, and that was also the beginning of the whole MEV conversation. I was very friendly with the Flashbots crew. And I got nerd sniped. It was very fascinating. Yeah.
So Fisher, we'll move to you. In terms of Babylon, Babylon's maybe the most emblematic project for Bitcoin Season 2. It's a new launch. It's done very well. People are excited about it. What made you think that the timing was right to launch a system like that now?
What do I think?
Like the timing of Babylon, was it just this is when you decided to launch, or was it you felt that the Bitcoin community was ready for something like Babylon?
Yeah, sure. About timing, I think Babylon is super lucky. So the whole Bitcoin renaissance, at least all Bitcoin Season 2, I think it starts from early last year, starts with the hype around ordinals and BRC20s, which attract attention of the community from ETH and Solana ecosystem back to Bitcoin, so that people know, hey, Bitcoin can actually do something. Then the second wave that drives Bitcoin renaissance is the technical advances on the Bitcoin side, including BitVM and Babylon's trustless Bitcoin staking. And then like early this year, Babylon made another little contribution to Bitcoin renaissance. We hosted the conference called Bitcoin Renaissance in East Denver.
It was a great conference.
Yeah, and turned East Denver into Bitcoin Denver. Yeah, then we keep building, and then in August, we launched our mainnet, which is very successful. So I think we are very lucky with the timing, and the support from the community is super important.
Yeah, YQ, moving to you, you spent a lot of your career outside the Bitcoin space, but now there's enough interesting things to build on Bitcoin that you are at least partially focused on it. You're working with Babylon. Tell us about that transition and how your prior work on EigenLayer now applies to Bitcoin.
Yeah, absolutely. So as we all know, right? So there are a lot of new features actually on Ethereum for the past 2 years, especially on restaking side. If we look at sort of the history for the restaking, we can probably look at this Eigen's history. Originally, since last year, they are trying to focus on the supply side. Basically, they attract a lot of TVL from the stakers, over 30 billion or something. And after that, rightly, they try to find the demands for this TVL. Basically, we call share security. And we work closely with the Eigen first, basically trying to figure out, like, okay, what are the real use cases for these restaked assets? And then we find out, okay, since we are launching a lot of rollups, that'd be great. We find ways to do the decentralized verification and faster finality by leveraging this share security. That's how we build a bunch of AVS for Eigen and also Ethereum. But as you mentioned, right, now somehow we re-add this Bitcoin Season 2. Basically, a lot of Bitcoin holders and developers want to see what are the new utility we can bring to the Bitcoin. So that's the thing, like, sort of like since last year, we went out to David and Fisher, and basically we try to figure out, okay, Babylon is building this restaking platform. So Babylon can really attract a lot of Bitcoin holders to provide this sort of the TVL for security. Then on top of that, what kind of unique demands or use cases we can provide for Babylon and all for BTC holders. On top of that, we can generate extra yields, right? So that's a part like so far we've been seeing a lot of demands, at least from our clients and customers. They want to figure out, okay, is it possible we can bring the LSTs on top of Babylon to their rollups or L2s? That's one thing. The second thing will be, okay, Babylon is already on mainnet. What kind of new EVS we can build by leveraging this shared security from BTC? Because it's like over $1 trillion. That's huge, and definitely can secure a lot of interesting use cases. So that's why we're working closely with Babylon on like sort of building one is this forkless rollup, and just leveraging the shared security to slash if some of these validators are doing something wrong for the L2s or rollups. Beyond that, also we are trying to figure out, like, is it possible by leveraging these securities, we can provide better guarantees for bridgings between BTC and the other chains. So in that case, right, we can see, okay, previously we have relatively custodian bridges, but in the future, probably we can have a better permissionless, or at least with better shared security bridges to bring the liquidity from this staked BTC to some other chains.
Yeah, I want to come back to the bridges, actually, because there's a very good question around how do we make Bitcoin portable towards other chains, and we're in the middle of kind of a war over that. Nobody really knows what's going to be the dominant one. A lot of questions around wrap Bitcoin these days, but on the Babylon topic, I mean, maybe Fisher, how does this change the game for Bitcoin? Bitcoin now is maybe a productive asset. What does that mean for Bitcoin, the narrative? And then also, how does it change the game for these other blockchains that are leveraging Babylon for their security?
Yeah, so I think there are multiple facets to your question. So first, from a Bitcoin utility perspective, Bitcoin token currently only has two native use cases. One, you hold it, waiting for the value to appreciate. Second is to use it for simple payment. There's no other native use cases for Bitcoin, the token itself. So Bitcoin staking introduced the third native use case for the Bitcoin, which is stake, secure, and earn yield. Okay. So this is from Bitcoin use case side. And from the technical advancement side, Bitcoin staking is our first step to show that Bitcoin actually has great potential. People think Bitcoin is not smart, but actually it's not. We can do a lot of great things with Bitcoin. So our next step will be to work closely with BitVM teams to, based on security and staking, and bring liquidity to the POS ecosystems. Because think about POS ecosystems, what is needed? First, security. Second, liquidity. And third, users. So we lay out the security as the fundamental, and then bring Bitcoin liquidity and Bitcoin users to all the POS ecosystems, so that we can eventually create a more united crypto world.
Let's return to the topic of tokenized Bitcoin, wrapped Bitcoin. Munib, maybe we can start with you. Where do we stand in terms of making Bitcoin portable to other blockchains? What's the crux of the argument between the various issuers of these tokens?
Yeah, I think the way I think about this is like the mental model is you separate Bitcoin the asset from Bitcoin the rails. And a lot of criticism for Bitcoin actually is criticism of Bitcoin L1 the rail, that it's slow, it's clunky, it's hard to work with, it's not programmable. But you can actually bring BTC to other rails, which are faster, cheaper. And I actually sort of look at it as a stablecoin market. Like, if you look at Tether or USDC, they can actually go and mint their coins on different chains. Wherever the developers are and wherever the economy is, they're bringing stable coins there. But they're centralized companies, where Bitcoin is a decentralized sort of like network. So there are different ways that these stable Bitcoins, that are wrapped, programmable Bitcoins, are going to exist. We have recently seen Coinbase, right? Like they launched CBDC on Base and Ethereum. I think within 3 days they crossed like $100 million in Bitcoin issued. I think it's definitely going to billions, like if single digit or maybe double digit in the coming years. So in the market, like you will see like centralized versions, like CBBTC. You're just totally trusting like one exchange, one custodian with all the Bitcoin that's there. And you'll see decentralized versions like SBTC from Stacks. Right? So SBTC, the asset, is actually secured at the consensus level for the L2. And there are, it's an open network, decentralized, and you'll see other things as well. Like, for example, just 2 days ago, Mo at Aptos, like, they announced that they're bringing SBTC to Aptos. So that's another interesting link, right? Like, and we'll see a bunch of these wrapped assets being used on multiple chains. And that market is like very small right now, but I wouldn't be surprised if it becomes like a $100 billion plus market.
So I want to address this to the whole panel because I actually think this is a very existential question, which is, if we segregate the Bitcoin protocol and the asset, does that pose a risk to the Bitcoin protocol if the usage of units of Bitcoin might be happening on some other blockchain, is not returning any value to Bitcoin holders or the miners, really, in the form of fees? Is it kind of, in a sense, cannibalizing the security budget of the Bitcoin protocol if all the units of Bitcoin are being transacted somewhere else? How do you guys think about that? Anyone?
I might take a shot at it. Like, I've thought about this problem a lot. I think of this as like, the Bitcoin L1 is a highway that's congested and it's going to remain congested, and maybe there's going to be a very high tariff for actually using it, right? Like, because Bitcoin is more like a settlement layer. It's more like cold storage, right? If I want to use a hot wallet, if I want to, sort of like go play around with NFTs, if I want to go deploy some capital in DeFi, I'm probably not doing it on the L1. But if I want to have cold storage, if I'm doing settlement, if I'm doing like high value NFT trading, like some ordinals that are really like luxury sort of like NFTs, they might exist on the L1. But I think Bitcoin L1 is always going to carry that premium. The block, that it will be the most sort of like, in demand block space. But it's going to spill over. It's like building more highways around it, right? Like, nothing's going to replace the L1, but it's like you're absorbing the traffic that actually can't exist on the main chain.
Leo, I'll come to you in a second, but Fisher and YQ, how do you think about the way the Babylon affects the fee pressure on Bitcoin? Does it potentially increase fees because now you have other blockchains basically renting security from Bitcoin? Is that the way we should think about it?
Yeah, okay, sure. So I don't think, at least the protocol's Babylon design, they will not compromise the economic security or security budget of the Bitcoin chain. Indeed, one of the original motivation of Babylon is to find use cases, utilities of Bitcoin. And we believe that with more utility of Bitcoin, there will be value accrued. Then with the proper incentives, all the values will be redirected back to the Bitcoin ecosystem. Our first protocol was Bitcoin timestamping protocol, which timestamp data to Bitcoin, which will create transaction fee. Our Bitcoin staking protocol directly allow the miners to stake their Bitcoin and yield to cover their security cost. So I don't feel we are segregating the use case of the chain, the network, the proof of work powered network, and the token itself, because the token, the Bitcoin, eventually leaves it's unsecured by the proof of power layer. Yeah, so we are trying to find a better way to utilize both. Yeah.
So you believe in the integrated story, keeping the protocol, the transaction network, and the unit integrated?
Yep. Yep.
Leo, moving to you, I think the story Manib tells is a good one, moving from the payments-focused network to more richly stateful applications on Bitcoin, whether it's roll-ups, whether it's restaking, other L2 structures. How do you see this affecting Bitcoin fees? Are we going to see roll-ups buying entire blocks? What does that look like? What can we expect in terms of the outlook for fees on mainnet in the coming years as these projects are built?
Yeah, I think something is better than nothing. And I think this is whether rollups are taking activities away from Bitcoin onto rollups. I think this is a very, very different picture from what's happening on Ethereum right now. So for those who are not familiar, right now there's some pretty severe pushback on the rollup-centric scaling roadmap, and where, of course, Vitalik said, "Oh, this has always been the plan," but with 4844, now that most of these rollups are not posted, they're collecting a lot of fees because they're capturing the MEV and priority fees, but in return, they're not posting nearly as much of call that M blob onto the L1. So there are researchers that are saying, hey, L2s are cannibalizing activities of L1. Economic accruals are not happening to ETH holders anymore, which I don't think is applicable on Bitcoin because there's no activities to take away from L1 to rollups to start with. So I think if rollups are able to induce more activities, which I'm not sure how, that's still more than what's already currently happening on L1, which most of the transactions are still simple wallet transfers.
This is a backhanded swipe at Bitcoin. You just implied that nothing is happening on the Bitcoin mainnet right now.
I mean, I think the mempool is definitely more full than a couple of years ago, and we definitely have a chance of disproving the whole digital gold, which is very silly. Right. And I think it just comes in waves, right? First with ordinals and runes, and the macro doesn't support these kind of like continuous asset issuance. So there needs to be another wave of whether it's happening on rollups that induce activities and post proofs, or onto L1s, or there are more I guess native L1 protocols that makes more interesting things happen on Bitcoin itself.
Yeah, but I think there's an interesting point here about Bitcoin being simple. It's a simple protocol. Rollups are much more complicated, so they might be a better combination. That it's a simple protocol, it's not competing with the functionality that the rollup is providing. Whereas Ethereum is a complex protocol that's sort of competing in functionality with the things that you're trying to build on top. So they might clash more, versus it might be a better, more natural fit on top of a very simple base layer protocol.
It's interesting to see Ethereum face this possibly existential issue, though, of rollups or L2s capturing a lot of the value and not restoring it or remanding any of that value to the ultimate blockchain. It has been something we've worried about in the Lightning sector, but people didn't use Lightning that much. Leo?
Oh, can I just wrap up on that? So when Ethereum first came out, right, Greg Maxwell famously commented that, like, oh, blockchain is good for verification, it's not good for execution during compute. And then when CryptoKitty happened, everyone was like, oh yeah, this proves my point. Ethereum's just going to die. And I think some of that was true, but some of that was definitely underestimated how well L1 itself can scale. I think Bitcoin changing L1 right now is a little bit difficult to accommodate. So I think rollup-centric scaling is by far the most reasonable, most optimal way for Bitcoin to have these kind of more rich, stateful activities to take place.
Well, I can add a few points because I've been working on this scaling for Ethereum for a long time, for almost like over 8 years, since the time around is improve this consensus protocol for Ethereum, also applying sharding on Ethereum. I think since day one, when Vitalik Gavin Wu, when they proposed Ethereum, they wanted to be world computer. And so in that case, definitely, they want all the execution to happen, like basically on Ethereum. So, but gradually, when they had this over 100 different designs for sharding, right? They figure out, okay, if they want everything to happen on Ethereum, that's very challenging. So they proposed Plasma. It's a little bit like this sidechain and the state channel, and after that, we had this rollup design, optimistic rollup and ZK rollup, basically to delegate all the executions to rollup or to the L2. And then Ethereum right now it becomes mainly for settlement layer, the verification for order proof, and also DA layer to host most of the transaction data from the rollup. I think definitely we already achieved the goal. They set probably around 9 years ago, back in 2015. We really make Ethereum all the transactions super cheap. Right now, if you do transaction on OP, Arbitrum, or if some other L2s, the fee can be as low as 1 cent or even 0.01 cent. It's super cheap. They achieve it. But at the same time, it's really about the demands. Like we don't have enough demands or mass adoption immediately on crypto right now. Why I talk about this? Because like if we really see Bitcoin has season 2 or season 3, right? With all different like L2s. Right now, still not roll out because we couldn't do a settlement on Bitcoin. Then we need to figure out like, okay, what's the vision of like sort of the Bitcoin ecosystem? Do we really want Bitcoin ecosystem to be world computer or to be like sort of mass adoption for everyone? Or we back to the original white paper of Nakamoto, Satoshi Nakamoto, like just for peer-to-peer payment. So that's sort of the key factor. If we really want it very cheap, then definitely we need to make all the rollups and then sort of like, because for each rollup, as Nick mentioned, right, it will become an isolated environment. You won't really have the transaction fees on Bitcoin. It's exactly the same situation we have on Ethereum right now. So different rollups, they have the fee system themselves. They don't really contribute much to the parent chain. So, but at the same time, it paves the way for the mass adoption in the future. Because fee very low, throughput no problem. You can also customize the rollup or chains yourself. So in that case, the infrastructure no longer the bottleneck. So what we need is just more demands. But then it's back to the point, right? For Bitcoin, like season 2, we have the restaking. Basically, we want to generate extra use for BTC holders. We have the different L2s. We want basically have more utility for the token holders. So in that case, what kind of route or road we want to choose? Do we still want to focus on just like give more activities on Bitcoin, the main chain itself? So we may encounter a little bit more high fees, or we should really focus on the mass adoption. Just try to get as many Bitcoin holders as possible. Just make Bitcoin used everywhere in different stores, in different bars, in different like sort of scenarios. So I think that's the main factor, basically, how we drive the developer community in Bitcoin ecosystem forward for the next few years.
Well, it's a good point, and I think one question that we haven't discussed is, are roll-ups actually practical on Bitcoin? Will we even technically be able to get them? Do we need a soft fork in order to introduce roll-ups, or will BitVM take us there? So I'm curious for the panel's views. What is the path forward to actually get roll-ups on Bitcoin? Arguably, we don't have them today. Fisher, maybe start you.
Yeah, sure. So the concept of roll-up, as you just mentioned, comes from the Ethereum system and is designed for the Ethereum scalability problem. So I don't feel we should just copy-paste the Ethereum thing, apply to Bitcoin, and hopefully for it to work. Bitcoin is a different beast. It has different characters, so we need to build Bitcoin roll-up scalability solutions purposefully. So to me, I think a Bitcoin roll-up solutions, we should truly inherent Bitcoin security. So, and then it should bridge the Bitcoin liquidity back to it. So to achieve this, we will need some sort of smartness on the Bitcoin chain. So there are actually currently 2 directions. One is to build based on the current capacity or capability of Bitcoin to make this happen. Babylon Bitcoin staking is one, BitVM is one. Another direction is to hope for the upgrade of Bitcoin. You say like OPCAT, OPCTV. Yeah. So these 2 paths, they are not binary. So in the near term or mid-term, we take whatever we have and make Bitcoin great again. And then once the Bitcoin core developers turn their head around and enable the upgrade, then actually the upgrade will make the existing utilities that we have already built for Bitcoin even better, more performant. So yeah, I think that's the path forward.
Munib, last word maybe?
So I think we can take the extreme case that if you can introduce a opcode like a op start verifier or op snark verify, everyone agrees that Bitcoin can have rollups, and there have been opcodes in Bitcoin in the past that have been disabled, re-enabled, and so on. So there's a path. It's going to be slow. It's going to take a very, very long time, which I like about Bitcoin. Like, it's not that experimental. But there are other ways, like, with BitVM, we might see rollups. There are forks of BitVM coming. People are trying to do almost like zero-knowledge proofs on Bitcoin with certain caveats. It's happening right now. So the amount of stuff that's happening today with basically no changes to Bitcoin is extremely encouraging. That with very small changes, but maybe just opcat or something, we should be able to make a ton of progress, which is exciting. But I do think that I have a very strong belief that Bitcoin needs to carve out a very different path from what happened with Ethereum, because I think you don't want to end up in a situation where Ethereum is today, right? And I don't think Bitcoin will, but I think we need to be sort of like more mindful of how we carefully build out the Bitcoin ecosystem.
Well, in the interest of time, we're running a little bit over, so we're going to wrap it up there. Gentlemen, thank you for your comments today. Really exceptional.
Thank you.